Uh-oh, the market's on fire. Well, it's actually just typical January activity. You see, our last quarter in 2023 was so dead that the activity feels like it's on fire. We also, my good friend and I, Mr. Dion Beg, make some predictions of what's going to happen with our real estate market in 2024 here in the GTA. Are interest rates going up, down? Are home prices going up or down or stay even? Well, all this and more right after this. Here we are, my friends, the start of a new year, and we are here with our good friend and favorite mortgage broker in all of the land, Mr. Dion Beg. How are you, my man?
Hey Gary, Happy New Year.
Happy New Year. Fireworks are going off somewhere. I'm sure they are, even though it's January the 8th, but that's all good, my man. There's kind of that little excitement to the new year, as there always is, but I feel like there's just a little buzz in the air. I don't know about you or some of your colleagues and even clients calling and checking in with you. How's the start of the year going?
Yeah, I think everybody's starting this year a little bit more positively in the world of mortgages and real estate than they started last year, right? When we started last year, we did not know what direction interest rates were likely going to head in. This year, it's very highly likely. It's effectively been predicted. It's in the stars, as per the Federal Reserve Bank of the USA, that rates are coming down. So it's nice to start this year with some level of confidence that that's the direction we're going in.
Yeah, yeah, and you and I are both always the glasses half full, and I think even my friends, we're going to do some predictions here about mortgage rates, the number of sales, and things like that. And I will venture off to say, even if we hit the same number of sales as we did last year, 2023, at approximately 65,000 on the Toronto Real Estate Board, or I think what is the number across Canada, just over 400,000, almost 500,000, excuse me, about 430-ish thousand is where that number is. And I will venture off to say, even if we hit that same number, it'll be with a positive attitude as opposed to that negative attitude. Do you have that same feeling?
Yeah, it's just like, yeah, what direction are we going in? And can we buy with the confidence that rates are going to stabilize and go down? And we return to a feeling that, in a regular market, when things are all good, prices actually increase gradually over time. And that's important word there, gradually, because we haven't seen anything gradual since 2019, right? It's just been major swings in one direction or the other. I think all we're just looking for is stability, some return to normal. And the interesting thing is this pent up demand, as we've been talking about immigration, population growth. Like once things get back to normal or pricing gets back to normal, I feel like all these people who've been waiting to buy will likely be back in the game.
Yeah, yeah, I have that feeling. I've been scrolling through just like many people do on what listings are available, and of course
Mm.
over the holidays is never a great time to kind of get a gauge on the market, in a sense, because there's listings that have been sitting and you might have one or two sales but not many, and of course you'll most likely not see new listings appear, and it's this week and definitely next week we'll
Mm.
start to see that inventory start to come, and that new inventory always kind of excites people, especially if you're a buyer just sitting there on the fence, just in a sense waiting for not only that right property, but just to see that influx of new listings, because we haven't really had that for a few months. It's just been that stale listing over and over again. It's not really stale, it's just we're not seeing some sales and some new inventory, right?
Yeah, and actually, let me ask Gary from a selling perspective, if there are clients out there who are considering listing now versus waiting to list in the sort of spring market, what's the conversations that's going around your brokerage at the moment?
Yeah, that's an interesting comment. Uh, here's how I would look at it. And that conversation is, everyone has a reason for selling. So let's understand that reason for selling. Now, if you are contemplating, do I list today? Do I wait to a spring market? Do I wait to a fall market? Whatever it is. And I think with some of your insights, knowing that we might see a mortgage hold one more time in January, and then and we know there's not an announcement in February. Is
Yeah.
there a possibility, and I think a pretty strong one, perhaps?
Mm.
Here's maybe one of my predictions, not yours, but my prediction, that we see a decline in the interest rate in March. And I think that will provide an influx of not only well, most importantly, listings, and then even more importantly, is buyers. So that to me, if you can wait till that early spring market, list in that spring market. If you need to sell now for other reasons, or other reasons could be jobs, moving,
Yeah.
anything, downsizing your mortgage, downsizing your house, whatever it is, list in the next couple of weeks because people are waiting. People are here. Here, this is where I want people to listen. People are waiting for that new inventory
Right. Okay.
because we've been seeing the
So
same thing over and over again, right?
yep. So you and inside your brokerage, you have buyers who are ready to buy. They just can't find the product they need.
Yeah, they need, they
Yeah.
like, they want, because
Right.
if they did, they would have already purchased, right?
Yeah. I'm with you.
You
Okay.
know, and and we're just waiting. There's people waiting for that new inventory. I have buyers that are waiting for new inventory in some little pockets, and it's the same old listings. They're just not the ones for them.
Yep, I'm with you. Yeah, and look, in relation to those interest rates, yeah, we have a meeting this month, end of the month. Well, January 24th is the next meeting. It's widely predicted that that will be a zero change. I think it would be a little bit overly optimistic to expect that that would be a drop in rates. I don't think anybody's predicting that. March would likely be the earliest opportunity for the Bank of Canada to make a move. I think that would be, again, on the optimistic side, it's not out of question, but it's possible. Most people in the industry are expecting it to fall sometime, around summer, June, July, somewhere in there, so that we can maybe play out what the spring market brings, and then see how much of a downturn we want to dial those interest rates down. But I don't think it's going to require a downturn in interest rates for the market to be reinvigorated. I think that just a pause in January and again no meeting in February, coinciding with a spring market, which is traditionally the time when people list and people are willing to leave their homes and get out of the snow, with the snow melting, and get out and start looking at property. My humble prediction is that March and April will be somewhat of a reinvigorated market, even without a rate drop.
That's good. Yeah, I can get on that same bandwagon. I'm hoping for that rate drop, as I think many
We all
people
are.
are.
Yeah.
Yeah, but you're right. Like as I say, as we've both been saying, there's that pent up. I don't want to call it demand. There's just that pent up of yeah, it's the same old listing. We need to see more inventory, have better selection, and do I see prices dropping at all? Here, let's focus here in Toronto. That's where most of our content is formulated from. Uh, I actually don't. I think for the next couple of months, we're going to hold at where we currently are, and possibly that, I don't want to say March, but possibly April, we start to see that incline. So be ready for it. And if you're a buyer, have that expectation. If you're a seller, watch the market closely.
Yeah, I will say, even just in the last weeks and over the holiday period, we have had more inquiries come in. We actually got very busy in the week up to Christmas time,
Mm.
which was interesting, where I think people saw what was happening in the United States and have come back off the sidelines. We're getting them pre approved. And while they may not buy today, they are effectively saying, yeah, we're back in the market to look. And I just had a purchase yesterday where the client called me, said, yep, we've got a place. And we had a nice discussion where I said, hey, guess what? Since we last spoke, the fixed interest rates that we had discussed just 3-4 weeks ago are now lower and will likely be lower before the time you close. So the way that the direction of the bond yields are going, as you've probably seen, Gary, I remember just a couple of months ago, you and I were sort of sweating about the fact that it broke 4% and it actually peaked up around 4.4. We're now all the way back down to 3.3. And we haven't seen this for more than about 7-8 months, the bond yield this low. Something interesting to note is that the last time the bond yield was as low as it was today, the 5-year fixed rates were in the mid fours, around 4.5.
Mm.
And today they're still up around the mid fives on conventional deals. So there's still the retail 5-year rate at your bank branch is significantly higher than it should be when the bond yield is as low as it is now. And people in the industry are basically saying, look, the banks, the institutions are waiting to see if this positive feeling that the bond traders have is actually going to trickle down into the economy and actually show itself, right? And they're holding off on dropping these rates. And just again, with the cycle of seasons, most people are saying that traditionally the retail banks get competitive around springtime. And so they should be around 4.5. They are at around 5.5. And if things go per normal moving forward, then we should see a drop closer in springtime. And if it all comes in line, hopefully it comes in at the mid fours where it really should be right now.
So that's interesting. You just kind of gave me an idea there. So if you're a buyer, and you're needing to buy, let's say the month of January, early February, that doesn't mean that's what you're, if whatever the interest rate is in the end of January, you purchase, that doesn't mean that's going to be your interest rate when you close April 15th, as an example, right?
Correct. And
So
this
there's
is
a
really important.
yeah, you see where I'm going with it. There's a possibility that that current rate will be maybe lower. Is that kind of maybe kind of what we're saying here?
Yeah, and I'll tell you, we as mortgage brokers, this is where we really come into play for the buyers. Meaning, if you buy a property today in January, and let's just say, using your example, you're closing on April 15th. Okay, we could get you a rate from, let's just call it lender number one today, best rate in the market today for, let's say, a 5-year rate, ready to close April 15. Now, between now and April 15, if rates change, then hopefully that lender that we're dealing with also floats their rate down to continue to be best in market. But if they don't, and lender number two comes out with a better product that suits our client prior to April 15, and we have the documents that will fulfill an approval with that lender number two, we as a mortgage brokerage will have that conversation with our client and say, hey, look, we had this commitment with lender one. They haven't moved as low as lender two has. And so maybe we should now send that application into lender number two. And that's again where a mortgage brokerage can work to your advantage, especially in an environment where rates are changing and likely in the downward direction. You need to be working with a lender or a mortgage brokerage who doesn't just have access to one lender, right? And the funny thing is, Gary, once we let the lender number one know that, hey, the client is actively looking for alternatives, oftentimes they'll match. And so we don't have to go through the whole process. But that's where we, as an advocate for the borrower, can actually work to their advantage so that they ensure they get the best rates.
My friends, you if you ever wanted to know why you're working with a mortgage broker, that's the reason why right there, as opposed to going directly to your bank. And I know some people have great relationships with their bank, and that's great. Uh, but the bank is not always watching the other products out there to help serve you better, right?
Yeah.
Excuse me.
And
Yeah.
it's not in their interest to let you know that, hey, our competitor has a better rate than what you've been offered, right?
No, no. You sent me a couple of notes, and one of the notes that
Yeah.
you talked about is the rate of mortgage renewals and the fact that we've already seen a lot of renewals, and people are
Yeah.
wondering what's going to happen when the renewals come in. And their interest rates are sorry, yeah, their interest rates, their payments, their monthly payments are going up. The fact of the matter is, we've already seen a good chunk of
Truckload.
that already happen.
Yeah, so effectively, 45% of mortgages that we're going to need to renew have been renewed in the last year, right? And a lot of people at the start of last year, knowing the rate environment we were going into, were predicting massive default, massive stress, fire sales on properties, foreclosures, all of this stuff. And the reality is, none of that actually came to fruition. And so, this mortgage cliff that everybody thought we were about to fall off, if last year was a prediction, then I can imagine that this year is going to be fairly similar. And the way that people have been dealing with these big jumps, and let's be clear, these jumps in payment have been anywhere from 30 to 50%. Meaning, if you were paying $2,000 a month, you're now paying potentially $3,000 a month on your mortgage. But somehow Canadians managed to hold it together, right? And a really telling note on that, Gary, is the mortgage default rate, which in Canada has been a world leader in terms of how low we have always been, right? So that default rate is still at historic lows of 0.15%. Now, I always look at that number and I go, let me put this in context of how many households are actually in default. So at 0.15%, the Canadian national average, it means that for every 1,000 homes, only 1.5 homes are defaulting, right? And so, and if you think about it, take away the interest rate challenges that we've had, what happens is death, divorce, and injury and medical issues, right? Which are big reasons why people fall into financial trouble. So the thing is, these interest rates haven't dramatically adjusted our national default rate. It's still at
Mm.
0.15%. And I don't expect that to change in the year ahead.
Yeah, yeah. That's interesting. Of course, the media likes to talk about the huge increase in defaults, and when you start to understand those numbers, they'll tell you we've doubled or tripled the number. Well, in a community of 5,000 homes, you might, like as you said, we might see, I think the number is 7.5 homes that might be in default.
Yeah,
Like that,
something
it's
tiny,
not
right?
that many,
And
right?
if I just go back to that 1,000 homes example, where the average is fewer than two homes are in default. If you translate that over to the United States, okay, and this is a great comparison. So remember, in Canada, it's two per thousand homes. In the United States, that number is 36 per thousand homes. It's 3.6%. That translates to a 24 times greater default rate in the United States than
Mm,
we have here in Canada.
yeah.
So just keep that in mind when you're seeing these cross-border comparisons, that we in Canada, we pay our mortgages, we pay them on time, and the default rate is tiny, even in this interest rate environment.
Yeah, and I'm going to throw this out. If you'd like to receive the weekly update on the number or on the power sale properties on Toronto Real Estate Board, hit me up, and I'll put the link here. I send that list out every Wednesday, and typically we see 2025 listings on. Let me rephrase that. We see a very short number of listings come to market every week. It's about that 20 to
Mm,
25. What we have been seeing over the last month is maybe 5 sales a week. But you have to understand what, we were the number of sales on all properties in November and December were down dramatically, and I think this number is going to pick up. The number of sale properties per power listing homes are listed, we're going to see that number increase. So that number should jump up.
mm.
I think is going to jump up at the end of January to about 10 to 12 homes a week. So that'll catch up on its own. Just the
Okay.
state of the cycle of the market, but
Well,
it's
keep us
interesting.
updated on that.
Yeah, I like
I'm just going to put
following
the
that.
light on. Just got dark here. One second.
There we go.
Okay.
In the light.
All right.
In the
I'm
light.
back here.
Okay, so I like this is my segue. 2024, we are in the light, and
Yes, let's do it.
let's do it. Let's do it. So let's talk about the number of sales. We kind of broadly talked about Canada being at about 400, I think it's 430-ish thousand for 2023. And
Okay.
the Korea, and you sent me this information, the sales forecast is as high as 490,000, which is about a 10%, sorry, 9% increase
Okay.
in all of Canada. Now, if we're talking about Toronto, on the Toronto Real Estate Board, we had the lowest number since I think 1901. I'm kidding, it's not that long, but you get
It was in
the
over 20 years, right? It was in
yeah,
over
yeah.
20
Yeah,
years,
I think it
right?
was back to 1990 something, early 90s, and we had the exact number here. I wrote it down because I didn't want to mess this up, because people will call me out on it. We had 65,982 sales. Okay, and
Okay.
most people are saying we're going to see a 10% increase here in Toronto, which was is only take us to about 74,000 homes, which is not many.
Right.
I believe we're going to see a minimum of 75,000 homes. That's like a 15% increase.
Gotcha.
That's where I see. We've talked about this in the past. A good economic market for all of Toronto, where everyone's feeling good, is above 80, below 90, somewhere in around there.
Okay.
So you could call it
Right.
85,000. So we still have some work to do in a sense, but to hit 75,000, that's 10,000 more homes. It'll feel this is where we got to caution people. It'll feel like the market is on fire again because we had
Mm.
it's so little sales. So you
Yep.
just have to look at it from that big picture perspective, and of course you know where your local market is and what's going on there. But I think we'll definitely hit that 75,000 mark without a
75,000.
doubt. Yeah. Yeah.
You know, Gary, just when you mentioned that number, you said 65,000 sales in the year 2023. I think the last time that happened was the year 2001, right?
Wow. Yeah.
Something like that. And I just out of interest, I went and looked at the population
Oh,
in the
yes.
country
Yes.
at that
Yeah.
time. So back then, the population was 31 million. And as we both know, the population is now 40.5 million, right? So
Wow.
we've had a 25% increase in population, and last year was our lowest since 2001. So it's insane that those are the numbers that we're in right now, which in my mind just translates to a whole bunch of people just waiting for the time to buy, right?
Yeah. Yeah. That's incredible.
Mm.
10 million people and that little amount of sales.
Yeah.
So what does that do? Here's the question to the mortgage professional in the room. Add 10,000 more sales. What does that do to the mortgage environment?
Yeah. So just keep in mind that, okay, you're talking about this year being around maybe 75,000 transactions.
Yeah.
Compare that to the peak of 2021, where we had upwards of, what was the number there? Was it
120, over
120?
121,000 sales or something. Yeah.
121,000. Okay. I will tell you, and you probably remember this, it was absolute madness, right? I was probably working 16-hour days. Every deal that came in was unconditional firm, right? That's the only way a buyer could have bought in that environment. I will tell you, as a result of that, my team's underwriting skills improved immensely because we had to become better than the bank underwriter. We had to be able to say to our
Mm,
client, yes, you can go firm on that deal and we will get it funded. All right. And
right.
touch wood, we never had an issue that year, but we were under the pump every day, all day. Deals were coming in, purchase agreements. Now, do I think that this year is going to translate to that? Nowhere near that, right? Nowhere near that. We are running well within capacity. Banks are running well below capacity. As you can see, they've let go of, the major banks, RBC and Scotia. The headlines let go of 3% of their staff. Thousands of people were let go. But remember, they were all hired on after the year 2021 because they were expecting 22 to be similar. So I feel like all this hiring that happened has been a reduction of people who didn't need to be hired. And
Mm,
I still think that major banks in Canada, I personally believe, are at least in the GTA, we could probably run at 100,000 transactions without any major sweat on the
mm,
banking
right.
infrastructure, turnaround times and those types of things. 21 was a huge learning curve. We're never going to have to get back there for a very long time, likely, to that number of transactions. So I know that the institutions would be easily able to manage 75,000 transactions this year.
Yeah. Yeah. That's good insight. And that's the reality of it is we've already been there.
Oh yeah,
It's just the roadmap has already been written. It's just a matter of, okay, let's not do that again. We're going to do this because we know when we kind of faltered off a little bit from whether it's how we purchased homes to the underwriting to whatever. We've already had those mistakes. They're behind us, right? Yeah, good
you got it.
stuff. Good
You got
stuff.
it.
No, I feel like this will be uh, a rebound year, but with cautious optimism. How's that sound?
I
without,
think that's
without,
that's a good catchphrase there. Cautious optimism in the light.
Yeah,
Put it all
yeah,
together.
I like it. In the light, there you go. Yeah,
Okay.
we've often talked about, and I know some of our colleagues survive until 2025. We're on the right track. In fact, I think we are ahead of that. Even in the first week or so into January, just to seeing some of the data points coming from the bond traders and everything else, and what I'm seeing around our brokerage and things like that. The glass is half full, my friends. There's always something to talk about or to complain about or to look at or to be concerned about, but we're okay. We're okay.
100%. I feel like we're going to end this year much stronger than we did last year. And for those of you who are sitting there waiting and watching, I would say watch closer. And if you're really serious about buying, just get your financial paperwork in order. Go get approved with a mortgage brokerage. Feel free to reach out to us. And whether you buy in January or you buy in July, it doesn't really matter. What's important is that you've made those steps to prepare yourself, because the worst thing is seeing that, oh, the market has jumped, oh, prices are moving at 10K a month like they did before, and now you're, because you just didn't have your paperwork in line, you're now paying 20 or 30 grand more than you could have, because you decided to wait until you saw the market pick up. Don't do that. Get ready now, and when the market picks up, you're actually ready. You're in the market. You can actually go and make offers.
Yeah, there you have it. We got to just like training for a race. You start months and months and
Off
months and
season.
sometimes years before, right? Is what that off season looks like. So if you're sitting there thinking selling in the spring, this is your off season where you need to be prepared. So that's a good analogy, at least in my
You bet.
world. My friend, remind us how to get a hold of you.
Yeah, kangamortgage.ca, on Instagram at the Dion Beg.
There you have it, my friend. That's Mr. Dion Bag. As said, I'm Gary McGowan, and we'll see everybody in the next episode. Goodbye for now.